You may have seen some headlines saying there's a bill being considered to remove capital gains for most homeowners. And before you get too excited, let's slow this down and talk about what it means, what it doesn't mean, and why it matters if you own a home or are planning to sell one. There's a newly introduced federal bill being reported by RAS Media and others that would eliminate the capital gains tax on the sale of most primary residences. Right now, under the current law, if you live in a property for 2 of the last 5 years, you can exclude $250,000 of profit if you're single, or $500,000 of profit if you're married and filing jointly. Anything above that gets taxed. This bill would replace that cap with a full exemption for qualifying primary residence sales, as long as you meet the residency requirement. Here's the real backstory. Those $250,000 and $500,000 exemptions were set in place in 1997. Home prices have more than tripled in value in many places in the country since then, especially places like California, Arizona, Texas, and Florida. So more and more long-term homeowners are getting hit with capital gains tax just for selling the home that they raised their family in. From a policy standpoint, supporters are saying this tax is outdated, it discourages people from moving, and it traps inventory. If something like this ever passed, it would remove one of the biggest hidden friction points in the housing market. Right now, a lot of people don't sell because they say, if I sell, I'll lose 6 figures in taxes. So they stay put. That keeps inventory tight. That keeps prices higher. That keeps buyers stuck competing for fewer homes. If sellers could keep more of their equity, they'd be more likely to sell, and that would help unlock supply. Now this part matters. This bill has been introduced. It has not passed. It hasn't cleared committees. It hasn't gone through the House or the Senate. So if you're thinking, great, next month I'm selling tax-free, not so fast. Right now, this is a proposal, not a guarantee, and not something you should base a financial decision on yet. If you're a homeowner who's thinking of selling in the next 1 to 3 years, here's the smart move. Talk to your CPA about your current capital gains exposure. Know what your real tax liability would be today. Understand your cost basis and your improvement credits. Don't assume future law will save you. And if this bill ever gains traction, that's when timing strategy becomes very real. This is one of those ideas that makes a lot of sense on paper. So yes, it's worth watching. Yes, it could be a major win for homeowners. And no, it's not something to count on yet. This is exactly why you want to work with a lender and a real estate agent who look at the long game, not just what today's headline is. Because in real estate, timing and structure matter just as much as price.